Shares of electric vehicle makers and Tesla's Asia suppliers are tumbling on Thursday, and with it, all Tesla suppliers and many EV makers on the stock exchange as well. We are seeing Chinese EV makers NIO, Xpeng and Li Auto among the largest losers on the Hang Seng index, with NIO plunging over 7% today. South Korean display manufacturer LG Display, that's known to supply the car displays for Tesla's Model 3, slipped over 4%. That's as the EV maker missed fourth quarter revenue and profit targets, but also warned of slower sales this year. Tesla said during an investor presentation that vehicle volume growth in 2024 may be notably lower than last year's growth rate as the company works towards launching its next generation vehicle in Texas. For more, let's bring in Russ Mould. He is investment director at AJ Bell. Thank you for being with us. Russ, it really has investors worried about this slowdown. What was the main worry here, Russ?
Yeah, it's been a long-standing process. If you look at Tesla's share price, it's now down by a half from its all-time high. So investors have been starting to get worried for some time. And Tesla has been easily the worst performing share among the American Magnificent Seven companies, or so-called. And if you listen to what Mr. Elon Musk had to say yesterday about the fourth quarter results and why they're disappointed, he did blame a slowdown in volumes, which I think a lot of which is down to competition, particularly from the Chinese like BYD. Some of it is therefore down to price pressure. There's also the costs associated with ramping the Cybertruck and increased development spend related to the new lower cost model, the Roadster, which has been long promised and is now hoping to deliver in 2025.
It's really interesting. And Russ, we know the car maker Tesla, it really is a bellwether for the whole of the electric vehicle industry. We are seeing BYD plunging on the stock market today as well. I mean, what's the outlook for the industry? What would you say are the main challenges ahead right now?
And there's clearly still huge governmental support and environmental support to drive the electric vehicle industry going forward. If you look at its big challenges, you clearly need to come up with price points that are very attractive to customers. They're still expensive vehicles to buy. They can be expensive to insure, particularly because spare parts are quite hard to get hold of. You need to be able to reassure customers about charging and ranges. You need to reassure them about second-hand values, which don't seem to last very well. And technologically, what happens to the batteries when the car is no longer being used? And in terms of the battery technology, I'm not a scientist, but looking at a product that relies on some very, very rare, difficult metals that are expensive and hard to get hold of, you do wonder whether the current generation of battery technology is suitable for purpose for a mass market product, and there may need to be different solutions going forward.
Russ Mould, thank you very much for all those details and updates. Thank you.
Thank you.
And now let's go to the top stories from around the world. Microsoft's stock market value crosses the $3 trillion milestone for the first time on Wednesday, retaining its place as the world's second most valuable company, second to Apple. After reaching the milestone valuation, the first time in its 48-year history, stock of Microsoft climbed 1.5% in trading on the Nasdaq. Microsoft's stock has been rallying in recent months as the company continues to ride an AI hype train from investors. The U.S. Federal Aviation Administration has barred Boeing from expanding production of its 737 MAX planes following unacceptable quality issues. The decision is set to deepen the economic turmoil at Boeing, even though the FAA agreed to allow the 737 MAX 9 jets to resume flying once inspections were over. Boeing has said it would continue to cooperate with the FAA and follow the agency's direction. And South Korea's Hyundai Motor has posted a 31% rise in fourth quarter net profits of $1.65 billion, missing analyst expectations. Hyundai announced it would take a $219 million loss after selling its plant in Russia, where operations have been suspended. The company is targeting revenue growth of 45% this year.